And here we continue to see them climb up, even though prices were going down. So this looked like a good bullish divergence, but insiders, call it what you will, they knew something was up because they immediately started to dump as prices were dumping, maybe due to the fact that these tariffs were going to go forward in a couple of months or a month and a half.
Hey, everybody. Welcome into the Thinking Crypto podcast. Joining me today is Brian from Santiment. And as you all know, we're going to go into the data and look at what's happening with Bitcoin and the top altcoins and how things are playing out for this market. Brian, good to see you, but wish the market was better, of course.
Yeah, good to see you too, Tony. The very, very small minority of people who've been shorting this tariff madness are pretty happy. But for the vast majority of people, we are certainly in a time that is pretty unprecedented. It's a very man-made retrace that we're seeing right now, obviously with voluntary choices contributing to where we are right now. And even though neither of us really are political experts, I think that's fair to say. We can say that this does appear to be a very global economic type of retrace that has, we really haven't seen anything like it other than Black Thursday from March of 2020, which was in a very different realm related to COVID. So crazy stuff right now.
Yeah. Brian, some people were asking me, is this a Black Swan event? And I'm like, well, it's kind of a pseudo Black Swan event because we had some idea from Trump as campaigning that they would approach or have tariffs, but I don't think anyone knew this was a way he was going to go about it, whether right or wrong, right? And not to get into the politics of it, but the fact of the matter is it's having a big effect on the global markets. And we are seeing pullbacks on the stock market, crypto, gold, even though gold was pumping the other day. So this is like some sort of pseudo Black Swan, if you want to call it that.
Yeah, no, I think that's fair to say. It's kind of a game of chicken right now. It appears that people are sort of waking up to that as the realistic situation we're in right now. And, Trump made these tariff announcements last Wednesday, the 2nd. He was talking about them even before he was elected, for those who were following along. And people kind of said, we're going to vote for him anyways. We know this is a possibility. We'll see how it goes when we get there. Well, we're now there. In fact, tomorrow is the official day where most of these tariffs are actually going to be implemented. A lot of people think it's kind of already happened, but the announcement was last week, and there's a lot of negotiations right now. We had talks yesterday about him putting a 90-day pause on all these tariffs. Turned out to be a false rumor that CNBC and readers apologized for, I believe, but that caused chaos in the markets. It's an ultra sensitive time where every piece of news that comes out right now is contributing to like a 2, 3, 4% rise or fall in the S&P 500. And with crypto being correlated to it, it's going along for the ride right now.
Yeah, it's wild, man. And I've been trying to not be or keep up with it because there's so much back and forth, red light, green light, confusion. You mentioned what happened yesterday. It's just wild. So Brian, let's look at the charts and let's start with Bitcoin because we use Bitcoin as the measuring stick for the entire crypto market. What are you seeing from a sentiment standpoint? What are people saying around the tariffs? Is there a lot of fear around that?
Yeah, as you would expect, there is a lot of fear. I can briefly show how the correlation has kind of stayed intact. It's interesting because we had this moment right about here on April 4th. This was Friday, right before we kicked into the weekend last week, where crypto was actually going up and everyone was saying, okay, there must be a decoupling going on because the S&P is going this way here in teal. And Bitcoin was bouncing back up above 84K at the time. So people were quite optimistic. Turned out that we just needed a couple days for crypto to catch up to the downside of what the stock markets were doing. And it saw about a $10,000 market cap drop just over those next, not even 2 days, about a day and a half. And then it bounced. And we kind of ended up back around the 80K level as of this morning, about 3 hours ago, 7:30 a.m. my time. Things were looking pretty good, but it was happening almost like a regression to the mean, kind of a dead cat bounce, if you will. It appeared based on the news that Trump is really ramping it up against China, the other largest economy in the world, and China is showing strength themselves and explaining that they aren't going to cater to what Trump is asking for. So all of this talk was going on as markets were rising just a few hours ago. And then the inevitable happened, and we started to see the effects of the increased likelihood of a trade war really starting to blast off. And now we're back in the negative for the day for a fourth straight day. So it's the sentiment is all over the place. The sentiment is full of TA traders saying, oh, here's the support and resistance level. But in my opinion, this kind of goes beyond a normal analysis of usual support and resistances, because we're comparing times in which Bitcoin tends to top or bottom versus here when we didn't have, at least to this extent, tariff fears because Trump hadn't made his announcement yet. So it's kind of like doing TA analysis during COVID 5 years ago. You can't compare 2019 to March and April of 2020 because March and April of 2020 we're in this whole new world of fear and a new kind of world order, if you will. So it's the sentiment is kind of just, has anybody heard any news? Does anyone know what China is going to do? Did Trump say anything? That's pretty much what we're limited to at this moment.
Yeah, great points. It's unprecedented, or even if you want to use that word, it's just on a global scale, it's macro. So your TA is not going to hold up that great here because this thing changes from minute to minute, hour to hour sometimes, and day to day, of course. And it involves almost all the countries in the world. So it's like, how do you chart or do analysis on that? To your point, we need the resolution, some sort of conclusion to all of this stuff before we can get back to normalcy.
Exactly. And it's a combination of people who are taking it really seriously and then people who are kind of rolling their eyes because the whole like ChatGPT allegations that appear to be true, as though the administration was using some sort of AI technology to come up with their percentage tariffs for each country. So it almost feels surreal. Like this is a very real thing impacting 401ks and Roths and various investment accounts all over the world. Yet it's being controlled by an administration that people aren't sure what to make of right now, whether this is all just manipulation and a big initiated game of chicken, basically. It's so strange. We've never seen anything like it.
Let's take a look at what Bitcoin whales are doing. The guys who move the market, right? Are they accumulating? Are they dumping? Because this has been very telling over the years we've been watching these statistics.
Totally. So it's kind of twofold. The overall amount of Bitcoin held by all wallets that hold 10 or more BTC, that's actually climbing quite healthily right now. It's looking very good. There is an asterisk to this line because you're including all the big exchange addresses out there and liquidity providers. That's why we also include this one. And this one aims more at the reasonably sized shark and whale wallets holding between 10 to 10,000 BTC. And this one seems to have a bit more correlation with Bitcoin's price as of late. You can go back to, right after Trump was elected here on November 5th. Both lines climb in unison. That's a very good sign. And then you see the 10 to 10K line going down, the smart money, if you will, that don't include as many exchange addresses. And then prices go down with it. That's what these big green bars are. Then you can see it starts to go back up. Prices go up. We hit that all-time high on January 19th or 20th, depending on where you are in the world. And that's the day Trump is inaugurated. And here we continue to see them climb up. even though prices were going down. So this looked like a good bullish divergence, but insiders, call it what you will, they knew something was up because they immediately started to dump as prices were dumping, maybe due to the fact that these tariffs were going to go forward in a couple of months or a month and a half. And this is where you see the split where even though the 10 plus BTC wallets are all getting richer, when you get more precise with the 10 to 10K BTC wallets, they're going down for a while, do manage to go up. We see a slight rebound as they do go up. And then they started dropping again, and they've kind of wavered throughout April so far as we get to our lowest price, essentially since Trump was elected back in November. So right now, moral of the story is it's a little split. Overall, the massive wallets are getting richer, but the shark and whale, smaller whale addresses are actually shrinking just a tiny bit. So it's kind of a wash at the moment.
Yeah. The one good thing I was happy to see is that coming out of the January to February downtrend that was starting, we kind of plateaued, and then you saw to pick up, and now a bit of a slowing right now. I'm just glad the downtrend that, that slope had me worried a bit there in February.
Yeah, when both of these lines are going down together, it's pretty bad news. So this was definitely the signal to take some profit. And then this rebound was kind of a relief rally, but right around 2 weeks ago is when things started to look a little concerning again. So obviously this goes beyond what the smart money's doing. I actually think this paints a pretty positive picture that crypto's key stakeholders are hanging on tight, and they're not dumping into this rally the way that institutional investors are in the global stock markets, and for good reason. Crypto is not an imported or exported commodity or product. Therefore, it should have some insulation, but because it's so correlated with the S&P 500 and other stock markets, there's always going to be a negative impact when you see stock markets have the biggest implosion in 5 years.
Yeah. And look, if you remove this tariff scenario, right, let's say it never happened, there are so many bullish things setting up for Bitcoin and crypto. I mean, you have the most pro-crypto government, you have the SEC dropping cases, you got a Bitcoin reserve in play, you got crypto legislation being worked on by Congress. It's just the tariffs put this massive macro uncertainty and fear out there. But otherwise, if you're just looking at crypto, it's like, oh my God, this setup is bullish for the price appreciation, whether it be months or years.
Exactly. And let's take a look at what that setup looks like in terms of just some fundamental charts here, because I agree with you. I've actually been a little more bullish than a lot of other analysis channels out there. I didn't think we were about to rebound to a quick all-time high, but I at least thought that Bitcoin would be on the road back to the 90Ks pretty soon, had this tariff situation not just thrown a huge wrench into everything. And one of the main reasons why is because the average holding returns, so people that have been active over the past 30 days, they went way into the negative at the end of March. And they kind of have spent most of March in the negative, and finally kind of went positive a little bit briefly right before the tariffs happened. But when you see both the short-term and long-term MVRV lines here significantly in the negative territory, it's usually a signal that we're going to get some sort of relief rally, because this is a zero-sum game, just like any other sector out there. And there needs to be enough profiters along with losers to justify all the buys and sells that are going on a given day.
Yeah, absolutely. I was talking to someone about this, that after a strong Q4 run up, incredible performance, right, with gains on crypto and the stock market, a natural healthy correction and pullback, or whatever you want to call it, was due. And I think a lot of people anticipated that in January. But like you said, the monkey wrench of the tariffs took us way further down than anybody was expecting, obviously. And it's going to we're probably going to be stuck here until we get some sort of clarity from the governments, because this is a global thing that's happening.
Yeah, and people have different opinions about the timing of that healthy retrace you referred to, because it obviously happened right as Trump was inaugurated. So people are like, look at Trump, what's he doing? He's caused stock markets to crash and crypto to crash. Well, he inherited the country essentially after about a 2-year bull run, right? 23 and 24 were objectively amazing years for the majority of those months for stocks and crypto. So he's coming in to office when you've already got, the long-term MVRV for Bitcoin, at plus 31%. So he's inheriting the presidency of the United States when the average traders are way up in the long term and way up in the short term, more than they should be. Meaning there's supposed to be a mathematical retrace anyways, no matter who comes in as president. And I think gradually, both due to just raw math and due to fears of how much these tariffs are going to impact the world for the indefinite future, it's been a combination of both that pushed crypto down quicker than it otherwise probably would have gone down anyways.
Mm-hmm. What are you seeing on the stablecoin side, as far as Tether and supply and exchanges?
Yeah, so on dry powder for Tether and USDC, they're both kind of moving down. Keep in mind, this is the top exchange addresses. So we're just looking at the top 10 right now, which of course hold a significant percentage of all the stablecoins on exchanges. But I can update this chart if you don't mind waiting for 10 to 15 seconds. And then I'll add supply and exchanges here. We'll take off these two for a moment. And then we'll do the same for USDC. Okay, so these are the new up-to-date overall ratios of Tether and USD coin on exchanges. And they're both going down pretty significantly. February 3rd, we saw the overall amount of Tether in terms of percentage of overall supply at about 56.1%. USD coin was at 16.4%. If I hold down shift, drag to the right here. So about 4.4% less Tether is now on exchanges of the overall supply, and about 6.5% of USD coin has declined in terms of percentage of exchange. So the two top stable coins are seeing significantly less on exchanges at the moment, while Bitcoin actually looks continuously very low. We have had a little bit of an uptick since the tariffs really spooked traders, but this is hardly a rise compared to how much we've fallen over the last 6 months.
Interesting. Yeah, I mean, my takeaway, and it may not be the full thesis on everything that's happening here, but it seems like overall a lot of people slowing down here on accumulation. Maybe whales who usually use Tether stablecoins to buy their coins on different exchanges, maybe slowing down here, not as much minting because everybody's watching the macro uncertainty, waiting for something to come to a resolution.
Right. It's all kind of supply and demand. And if there's less demand for stable coins on exchanges, they're going to be tucked away for safekeeping until the demand picks up. So I think because we've seen such a decline and less and less enthusiasm for buying the dip as this 3-month retrace has gone on, it's natural for stable coins to not be as available on exchanges. They basically just hold a kind of a moving goalpost of stable coins to be available to traders. And when there's just less demand, they'll tuck some away somewhere else. And I think that's essentially all that's happening here.
Interesting.
Yeah.
Let's take a look at the top altcoins. Maybe we can start with Ethereum. It may be the same story for all of them, but if there's any interesting statistics around each, we'll talk Ethereum, XRP, Solana.
Yeah, definitely. In fact, before we go to those same on-chain metrics, we can also check out the positive versus negative sentiment for the top 4 non-stable coins. And one really sticks out here. Solana, a couple weeks ago, before we really started to fall, they had this absurd level of positive commentary going on. I'm 95% sure that this was bot driven. So it's like this strange anomaly, and that's the problem with the current state of social media. Until they really start to clean things up, we're at the bit of mercy of like how these different social media accounts, how authentic they are. So Solana had this weird anomaly. They're still showing way more positive sentiment than the others, even though there's no clear reason why it's suddenly getting so much bullishness. I'm just going to remove it for the time being so we can focus on the other three.
Yeah, and by the way, just to add some color, that does look manipulated because there was actually some negative news that came out the other day where the staking unlocks and Solana whales were dumping.
I heard about that. And there was a lot of talk about the network stability too, as maybe once or twice a month we get something potentially going wrong with Solana's network and it causing, even if it's for like a minute, if transactions aren't working or going through at the speed they normally do, it becomes a talking point. So the fact that we saw positive sentiment just going nuts to levels we hadn't seen before was highly unusual. And I agree with you. But as far as Bitcoin, so it's sitting a little under average right now. There's a slight bearish bias, as there probably should be when you see, the top asset in crypto dropping to the extent it was. Ethereum is way down there as well. Ethereum's a little below where Bitcoin is. Only getting about 1.1 positive comments for every one negative comment. So that's essentially like net neutral, which is unusual. Usually it's more like 1.5 to 1 for each of the top assets. And then XRP is actually way high, which is interesting to me. If I switch the price over really quick, it hasn't done anything too special, but there might be some news I'm unaware of. Either way, go ahead.
There was actually news. What was it? Today, I think the first XRP ETF goes live. It's a 2x long ETF, but also Ripple did a massive acquisition for like 1.25 billion. I just saw that news this morning, honestly, and I was like, whoa, this is huge. It's like the biggest acquisition in the crypto market or industry, since its inception. So I think that might be driving some of it.
What an interesting day to launch an ETF and announce an acquisition. It's probably getting fairly swept under the rug, except for the XRP community that's, of course, tracking this stuff. So that makes total sense because this is the highest positive point we've seen for XRP since November 28th, almost a little over a 4-month high. So there's a lot of bullishness there. I don't think that's necessarily going to push XRP's prices down, but the general rule of thumb, folks, is when you see super high positive sentiment, it marks tops. When you see super low sentiment, it marks bottoms, because prices always go the opposite direction of the crowd's expectations.
Yeah, absolutely. ETH, how is it looking? Because I know ETH is, man, I'm an ETH holder, so I'm feeling the pain that it's been rough, and the charts and the ETH BTC chart is brutal.
Yeah, you took the word out of my mouth. Rough is the best way to describe it. It's been by far the most disappointing top 10, top 20 non-stable coin out there for about the last year, almost 2 years now. It's had its moments, very short bursts, but overall, Ethereum's gotten hammered. Since the top on December 15th, we've seen the price drop about 63%. Just to give some perspective of how painful this has been. It's kind of been dabbling in the low to high 1400s lately, and we haven't seen that price since late 2022 when right before the FTX collapse. No, my mistake. This is it's very close, but October 2023 we saw similar prices. It was a little after the FTX collapse. If you want to say January, it was technically the last time we saw it, but huge drops in market cap and mostly drops in utility following that. So we did see a big transaction volume spike yesterday. This was about a 4-week high. And that sort of reflects in daily active addresses, circulation, and network growth, which are all plotted here. In short, they're all kind of declining because demand is drying up. But if we add on fees, just to give one upside to all of this madness, the fees are almost nothing right now. It's per transaction, you're paying about 21.5 cents per for every ETH transaction. Compare that to the spike of $7.23 on November 12th. I've seen times when it was $25 plus back in 2020, 2021. So this usually is a good sign of a bottom occurring. You can see it kind of happened here in early to mid-September. When fees get low and demand is at its lowest, you're essentially getting invited to start using the Ethereum network a lot more, because one of the critiques about Ethereum is how expensive it often can get for making transfers. And right now it's not. So that's a good sign. Also, the average returns are just absolutely ridiculously low at the moment. Negative 20% for wallets active in the past 30 days, negative 48% for those active in the past year. And especially that last number, we haven't seen it that low since the FTX collapse, when we saw Ethereum getting as low as 1,000 to 1,100 or so. So that's a very good sign to me. What I'd like to see still is more shorting going on. That's usually a clear sign of a bottom. You do see this little tiny red sliver right here, indicating that traders on Binance are beginning to bet against the asset. And usually that's an indication that we can see a turnaround soon, with those short liquidations adding as rocket fuel to prices bouncing back up. But this all just has to be taken with a grain of salt, considering the unique global economic circumstances we're in right now.
Yeah, for sure. And one of the things I'm hoping for, and what we've seen with other assets, that if the herd is thinking Ethereum is dead, oh, it's horrible, it's never going to recover. I think we saw this with XRP. I think it was that the market does the opposite, right? Because there's so much negative sentiment, and it's kind of like this. It forces the crowd to buy back in, because they're like, "Oh my God, Ethereum is moving again." We all thought it was dead.
Exactly. Yeah. The ideal setup is when you've got every other person on your timeline telling you to stay away from an asset because it's no longer relevant. You shouldn't trust it. It's dead, like you said. And time again, we've seen that be the catalyst for a huge breakout.
So Brian, any other data sets for XRP, Solana, or ETH? I know it's like everything's down right now. We're waiting for this macro uncertainty to be lifted. But anything else to call out, you think?
Yeah, just to give a quick update on Solana, since we didn't really talk about it other than the bot manipulation. It's not being talked about much at all. In fact, this is some of the lowest levels of discussions related to Solana since, at least since mid to late March. But I would anticipate it's going to start dipping even lower than that, as it kind of just blends into the other top caps for the time being. So there might be some upside because it's under the radar at the moment, completely independent from what the bot accounts are doing right now. I think it's really starting to see some negative sentiment similar to Ethereum. If we were to remove all of those bots, they seem to be kind of in similar spots. So, if, let's say, the tariff situation gets solved an hour after this recording between us, Tony, I think the first assets you want to look at are the ones that are getting, poo-pooed on the most, if you will. And that starts with Ethereum and Solana to me. I even prepared this chart. Long story short, when these bars are over this dashed line, it indicates that all of the average trading returns of people in the midterm, like 30, 60, or 90 days, they're in severe pain, making the asset underbought or slightly undervalued. It doesn't mean tomorrow we're going to start seeing a huge bounce because it's so based on this unique economic circumstance. But if and when that unique and strange circumstance goes away, all of these are candidates for big bounces, especially the ones, coincidentally, this one named Bounce is seeing one of the most underbought signals. We've got Linear, Power Pool, Reef. Most of these are pretty obscure assets most of you aren't tracking, but there's a reason they're in like the most pain, and they've fallen off the map so much that there's probably going to be some point in which they begin to catch up. But almost every asset on here is showing anywhere between a mild semi-underbought like Bitcoin to a significant underbought signal like some of these.
Interesting. Well, Brian, I'm hoping that maybe by the next time we meet in a couple of weeks, that this tariff situation is resolved and maybe markets can start to bounce. Maybe there's some good news from the Fed. They're cutting rates, maybe doing some liquidity injections to help the markets. Who knows? And we can put some of this stuff behind us. But right now, it's still max pain, it seems like.
Yeah, I still remember, what was it, yesterday or 2 days ago, when Trump was talking about how you don't want to panic. And to me, that's not good. You don't want your president telling you to not panic, because that seems to be a sign that there's some manipulation at play, and he's telling people what to do with their investments, which normally doesn't happen from the leader of a country. So we're kind of at the mercy of all the policy shuffling and bluffing and games of chicken going on right now. And the best thing you can do is not go too extreme in either direction, because so much is an unknown.
Yeah.
You know, the last thing you want to do is buy a ton and watch things go down way further, or sell a ton and watch tomorrow be the day of salvation for everybody. So I just recommend being safe right now and keeping your mind off of things and waiting for that big headline that'll change the markets a bit.
Yeah, great tips. And that's what I've been doing. I've been telling folks, I'm just waiting to see. I'm not buying a whole bunch of dips. I'm not selling anything. I'm just watching. And also, you know, I look at the markets from the macro, and I'm not putting money that I can't afford to lose or that's going to keep me up at night. So even though the market's down and my portfolio is down, I'm still paying my bills. I'm still living. And I try to, you know, tell people, be careful, balance it out. Don't put too much that you can't afford to lose, because markets move up and down different points based on different catalysts. But from the macro, the markets go up, right? As long as they keep debasing currency and printing money, markets will go up.
Great advice, Tony. Hopefully people are staying safe out there.
For sure. All right, Brian, great stuff. Thank you so much. And like I said, we hopefully we're in better conditions 2 weeks from now.
Fingers crossed, man.